the question we want to ask ourselves is the market forming a bullish reversal, or is the market going to crash, right? 58.30 is a level that we're looking at as a retest from the bear flag that played out, right? And then a retest of 55.70. So here are the two paths that I'm telling everybody to watch. Now we know that this, right, turned out to be a bear flag, right? So we have a bear flag right there. Then we had this turn out to be sort of a mini bear flag, right? This Liberation Day that wasn't Liberation Day turned out to be a mini bear flag, and it broke down. Now we have this right here. All of this is looking like, okay, that was a bull flag, right? That played out, but really, is it a bull flag or a compression? Because what this is starting to look like to me when I'm up to here is a possible inverse head and shoulder. And let me show you what I mean by this. So let's just say, hypothetically speaking, this right here is one shoulder, right? Is the right shoulder. Then right here, this is the inverse head. And then if we get, let's just say, for example, the 58.30 one way or another is going to get retested. It's going to get, if it rejects and we hold here at the 50, let's say 55.30, if this area holds, right? Now we can start making our right shoulder into June, right? Into June 7th. We make a right shoulder. Now you might say, well, the market's bearish. Well, the market does whatever it wants. So let's just say, hypothetically speaking, the market decides, okay, we're going to hold here. Let's just say, it's going to bounce around, all this area into June 7th. It goes here, then it goes here, and it goes here. So let's just say for May and June, usually April to July is bullish, but let's just give bears a little bit of a break here and say, now we go from here. Now we chop up, we chop down, we chop up, we chop down, and consolidate, right? While the market waits for supply chain issues, whatnot, right? If June 7th becomes a low, which is a major pivot for us, and the market holds, that it's going to be liftoff into July. Market's going to be somewhere around 6,500. Based on the dark pool, we actually have to go to 6,600, right? The confirmation is going to be twofold. If the market defends this trend line, this defends right here at 55, let's say 55.30, this is going to turn into an inverse head and shoulder after the bear flag played out into the summer. Right, the market's going to hold June 6th, catapult into July seasonality. The market is no longer worried about tariffs. Tariffs are off the table. POTUS is backing down, but we have supply chain issues, right? From all this freezing, exactly what happened in COVID. Well, we're not going to see that till August. When COVID lockdowns happened, all of this was almost the same. We were bullish. Everything was fine. Everything was over. We're going to reopen the world. Some states stay closed, but logistically, we're going to start reopening. And what happened? There was no supplies after July, August. CPI skyrocketed, inflation went up, and the markets rolled over. So markets are not forward thinking; they're reactive. The bond market is extremely worried. So this is what could be the bullish thesis, right, behind why everybody's bearish. VIX is already rolled over and calmed down, and nobody's worried about tariffs. So now let's just say, well, this is too bullish of a sentiment because we do have supply chain issues. So what we want to see them is, let me clean this up for a second for you folks. So we had the bear flag that played out, right? That bear flag here and here, and gave us the correction. Now we came up here and we defended, right, on this kind of bull flag, but the problem is it's not textual, it's more like compression. But all right, if you want to call it a bull flag, we came up here. And we're not quite blasting off. We're getting everybody that I said from Liberation Day. What can happen is if 58.30 becomes a double top, right? You might say, well, it's bearish. Okay, let's give the bears that this was a bear flag. So if this becomes now a double top, What we want to see is a rejection of 58.30, the breakdown of, sorry, let me get fixed. If we see the breakdown, then we can say, okay, well, it rejected here. If we go and hit, let's say 58.18, if we break through it, we can defend briefly, right? Pull in bears into OPEX, defend just under 5,500. Market comes back, right? Market says, okay, we're going to defend, come back up again to retest liquidity one more time, all the way up here, right? Still under the double top, then crack it and make a new low into June 7th. So one way or another, June 7th to me is going to be a huge pivot. Now the question is the pivot going to be, oh, this is running off on its own. Is the pivot going to be down here at around 55.15 where the market's going to make the inverse head and shoulders and blast off on no tariff and then react later after the July run into August when we start seeing supply chain issues with back to school, people just getting their supplies after vacation's over. Remember, most businesses were front running, which is why the market recovered. Earnings are looking good because everybody knew that this POTUS thing was going to happen. Now we don't know. There's no tariff news, but people aren't ordering yet. They want commitments. They want to know, hey, concrete policy is these are the tariffs. Okay, let me go order my supplies. If for some reason, like some of you might say, well, that's it's not going to happen. Okay, well then this is your double top. But the confirmation will be a break below the 5,500, and then it waterfalls into June, and then the summer run from 2003 is officially over. But I'm going to err on the side of 20 years of sentiment, right? 20 years we've been running bullish, that is going to be an inverse head and shoulder, and we're going to blast off and then roll over after August. Otherwise, this is what the bears are looking like. A double top in this area going into OPEX. It could be it could be somewhere around here since OPEX is May 30th. So we could, for example, we could ping pong all around here. It doesn't have to be perfect, but let's just say we come up here, reject it. Market doesn't want to, tariff, no tariffs. CPI might be a miss. Whether or not FOMC is bullish or bearish, she's not going to cut rates. But let's just say we start ping ponging, all of this, and then it turns into a bigger head and shoulders, and then the make or break is on July 7th. On June 7th, I'm sorry. Are we going to be at 5,500 and hold and new all-time highs, right? My primary path is all-time highs because there's no more tariff talk. Or if this becomes bearish, it becomes a double top, and then we reject and roll over into June 7th and, have the first bearish summer since 2003. So two possibilities. Again, you could have the double top that a lot of bears are looking at, or this semi inverse head and shoulders that I'm creating for the summer run. The biggest pivot, like I said, is this trend line here, or if these two here. We recovered from the bottom, but the truest test is a breakout. If we break out over 55.40, don't take a long immediately because it'll be a liquidity trap. Let's say 55.50, you can set an alert. If that retests on that shoulder-ish, the left shoulder, if that retests and it holds, just take a long and roll your longs into July. If this breaks down and we peak below 55.50, let's just say we come down here to 54.80s, right, which was right around here. If this defends, then the next time we pull back up to 55.50, you could take a pretty good short into June 7th, as we start getting supply chain news and so on and so forth. But if you want to learn how we do this, comment course below or email us and we'll show you the AI tools that we use. We obviously use technical analysis, but we use a lot of in-house proprietary systems to be able to predict the market, which is why we had said to a lot of you, wait till this candle to short, go long here, start going long because we were seeing that POTUS reacted to the bond market. The bond market is very unhappy, but they're unhappy after August, when maybe a bleep in June. The bond market is not worried about tariffs anymore. They're worried about supply chain issues. They're worried about the recession that is going to come after the Q2 earnings start impacting all these tariffs. And you're seeing it in the news. But I tell everybody, forget the news. We had told everybody the tariffs were over when everybody was freaking out because we saw the chart. Our AI was very bullish down here, and was also very bullish when we made this new high and we defended 51.15. Good luck to everybody. We hope to hear from you soon.